Partnership deed. Dear students, today let us learn all about partnership deed, that is, partnership agreement. Extent to which a partner can bind the firm. Implied authority of a partner. Extent or restriction of partner's implied authority. Liability of a partner on admission, retirement or on death. Rights of outgoing partner to share subsequent profits. Introduction, expulsion and retirement of a partner. Principal clauses in partnership agreement. Partnership agreement. A partnership is naturally the result of mutual agreement and consequently the various rights and interests of the partners in the partnership concern, as also the obligations of the partners to each other arise from and are to be determined by the partnership agreement. The agreement may be by word of mouth, in writing, by deed, or may be implied from the conduct of the parties. It is always desirable, however, that a partnership agreement be put into writing, embodying in clear and precise language the various terms and conditions as to the relationship of the partners to each other and also the internal working of the firm. Such an agreement or any portion thereof can be varied from time to time either by express agreement or by consent of all the partners. It must be noted, however, that although the partners may by agreement restrict the rights and liabilities of any one or more of their number to the outside world, every partner is the unlimited agent of the firm and his other partners so as to bind the firm in matters within the scope of the partnership business, and every partner is liable to an unlimited extent for all the debts and liabilities of the firm incurred in the usual course of the business while he is a partner. Extent to which a partner can bind the firm. Ordinarily, partnership are assumed to be based on the mutual trust and confidence of each partner in the skill, knowledge and integrity of every other partner. As between the partners and the outside world, each partner is the unlimited agent of every other partner in all the matters connected with the partnership business and which are not beyond the scope of the partnership, irrespective of any private arrangements that may exist among the partners. It must be clearly understood, however, that a partner's implied authority to bind his firm is limited to acts which are necessary for carrying on the partnership business and which are not in any way outside the scope of the partnership. An admission or a representation made by any partner concerning the partnership affairs and in the ordinary course of the business is evidence against the firm. Notice to any partner who usually acts in the partnership business of any matter relating to partnership affairs operates as notice to the firm, except in the case of a fraud on the firm committed by or with the consent of that partner. Implied authority of a partner. In the absence of any usage in the kind of business in question or the custom of the firm, it may be assumed that partner in a trading business has an implied authority to do the following acts on behalf of the firm: buy goods on account of the firm, sell any of the partnership goods, receive any payments of debts due to the firm and give valid receipts, draw checks and accept and endorse bills of exchange and promissory notes in the name of the firm, borrow monies on the credit of the firm with or without pledging the firm's goods, engage servants for the partnership business. Implied authority of a partner. In the absence of any usage or custom of trade to the contrary, the implied authority of a partner does not empower him to the following: a. Submit a dispute relating to the business of the firm to arbitration. B. Open a banking account on behalf of the firm in his own name. C. Compromise or relinquish any claim or portion of a claim by the firm. D. Withdraw a suit of or proceeding filed on behalf of the firm. E. Admit any liability in a suit or proceeding against the firm. F. Acquire immovable property on behalf of the firm. G. Transfer immovable property belonging to the firm or enter into partnership on behalf of the firm. Extension or restriction of partners' implied authority. The partners in a firm may, by agreement between themselves, extend or restrict the implied authority of any partner. Notwithstanding any such restriction, any act done by a partner on behalf of the firm which falls within his implied authority binds the firm unless the person with whom he is dealing knows of the restriction or does not know or believe that partner to the firm. Liability of a partner. Every partner is liable jointly with all the other partners and also severally for all acts of the firm done while he is a partner. Liability of an incoming partner. A person who is admitted as a partner into an existing firm does not thereby become liable to the creditors of the firm for anything done before he become a partner. But if a person on being admitted into partnership takes over the debts already incurred by an agreement with the existing creditors of the firm, he will be held jointly liable with his co-partners for such debts. Liability of a retiring partner. A partner who retires from a firm does not thereby cease to be liable for a partnership debts or obligations incurred before his retirement, but a retiring partner may be discharged from any existing liabilities by an agreement to that effect between himself and the members of the firm as newly constituted, and creditors, and his agreement may be either express or informed from the course of dealing between the creditors and the firm as newly constituted. In any case, the existing creditors of the firm must be a party to any agreement relieving the retiring partner from debts and obligations incurred during the time that he was a partner. Liability of estate of deceased partner. Where under a contract between the partners the firm is not dissolved by the death of a partner, the estate of a deceased partner is not liable for any act of the firm thus after his death. Right of outgoing partner to share subsequent profits. Where any member of a firm has died or otherwise ceased to be a partner and the surviving or continuing partners carry on the business of the firm with the property of the firm without any final settlement of accounts as between them and the outgoing partner or his estate, then in the absence of a contract to the contrary, the outgoing partner or his estate is entitled at the option of himself or his representatives to such share of profits made since he is deceased to be a partner as may be attributable to the use of his share of the property of the firm or to interest at the rate of 6% per annum on the amount of his share in the property of the firm. Introduction of a new partner. Subject to contract between the partners, no person shall be introduced as a partner into the firm without the consent of all the existing partners. A person who is introduced as a partner into a firm does not thereby become liable for any act of the firm done before he became a partner. Expulsion of a partner. A partner may not be expelled from a firm by any majority of the partners, save in the exercise in good faith of powers conferred by contract between the partners. Retirement of a partner. A partner may retire in any of the following ways. 1. With the consent of all the other partners. B. In accordance with an express agreement by the partners, or where the partnership is at will by giving notice in writing to all the other partners of his intention to retire. Principal clauses in partnership agreement. Among other things, a partnership agreement must necessarily contain provisions upon the following matters. 1. The name of the firm and the nature of the partnership business. 2. The commencement and duration of a partnership. 3. The amount to be contributed by each partner at as his capital. 4. The extent to which each partner is to be allowed to withdraw sums in anticipation of profits. 5. How the profits or losses are to be divided. 6. If any interest is to be allowed on the capital of each partner and the rate per cent. 7. The rate of interest, if any, to be charged on drawings. if any partner is to be allowed any salary. 9. How further capital, if necessary, is to be introduced. 10. Provision in regard to amounts to be brought in by any of the partners by way of loans and the interest thereon. 11. For all partnership transactions to be duly recorded in a proper set of books to be kept at the place of business and such books to be open to inspection of every partner or his representative. 12. That the accounts of the firm are prepared annually and after being duly audited by professional auditors, the firm's balance sheet is signed by all the partners as evidence of their acceptance. 13. The basis on which to determine the amount payable to a retiring partner or the representative of a deceased partner in respect of capital and accrued profits since the last accounts. The basis of valuation of the goodwill of the firm, if any, as also the other assets for the above purpose. 15. Clauses as to the rights and duties of each partner. 16. Clauses in regard to restrictions, if any, to be placed on the authority of any one or more of the partners to bind the firm in matters relating to the partnership business. 17. How any capital loss arising from the insolvency of any of the partners is to be borne. 18. An arbitration clause for matters in dispute to be determined by submission to an arbitrator. In the next lecture, we will discuss about capital, drawings, sharing of profits by partners, interest on capital and drawings, salaries to partners, loan by a partner, fixed and floating capitals of partners.